Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So throughout the last week, we have been spoiled with great investing information and content from some of the world's greatest investors. We've had both Warren Buffett's 2021 annual letter to his Berkshire Hathaway shareholders, and we also had a 2-hour-long Q&A session with Charlie Munger at the Daily Journal Corporation annual meeting. So the previous video on the YouTube channel was a summary of Warren Buffett's letter. This video is going to be a summary of that Daily Journal Q&A with Charlie Munger. And as always, the link to the full Q&A video with Charlie Munger will be down in the description below. I'll also leave timestamps right along the bottom of this video, so if there's any kind of key topics you want to jump to, feel free to do so and check that out. But for now, let's get straight into the video. Now, one of the fantastic things I really like about the Daily Journal meeting and Charlie Munger is that Charlie Munger really doesn't hold back, and he seems to be a bit more open in being brutally honest with some of his answers than he may be in the Berkshire Hathaway, the larger kind of Berkshire meetings that he does with Warren Buffett. So it's fantastic to see that from Charlie Munger, and he also just really talks about whatever he wants, sometimes even regardless of the question. He certainly is great at answering some of these questions really accurately, really concisely. But if he doesn't like a question, he just skips it. One of the most popular questions that came up was, what are Charlie Munger's book recommendations? And he said, I'll just skip that one and talk about something more interesting.
They would like to know the books that you're currently reading and books that you recommend.
I think I'll skip that one. Go on.
Sounds good.
And that's great to see from Charlie. I think anytime that we get access to some of these great investors, it's really cool to just see them talk about whatever they want to talk about at that particular time. So let's get straight into it. The first kind of big area that Charlie Munger touched on in various different forms right through this Q&A was basically the underlying theme that there is currently a lot of gambling and speculation in the stock market. And he gave a few examples, which I'll get to in a sec, but he's essentially mentioned that he's been through these sort of waves of speculative markets many times. And pretty much every time his strategy has been to just ride it out and ignore it. He said that he never got rich by buying, into extremely high PE stocks, extremely highly valued stocks in frothy speculative bubble type markets. He got rich by buying cheap stocks and holding them for the long term. So his strategy through a lot of this, overvalued market type time is simply to wait it out, to hold great businesses that he already owns, which he mentioned he's willing to hold at higher valuations than he might have otherwise, done in the past, simply due to really low interest rates. But largely, he's looking to simply wait out this speculative frenzy. And it's great to hear that from Charlie Munger. Even though Charlie Munger is well into his 90s at this point, he's still managing his own money and the Daily Journal Corporation's money and, helping Buffett with managing Berkshire's money, all for the very long term. He's managing it for the shareholders of those particular businesses or for his family with, his own family investments. And he's still got a very long-term time horizon for his successors and so on that he wants to see do well from that money. Now, continuing with this trend of speculation, Charlie Munger did actually sort of name and shame a few companies and, different asset classes throughout this Q&A. So let's just basically go through the list, I think. So he said that the GameStop short squeeze, he got asked about that. Of course, the GameStop short squeeze was a massive news story, basically Wall Street bets teaming up and buying shares in GameStop, which was had an extremely high short interest, an unusually high short interest, and the stock went up a lot and then back down a lot and then back up a lot, and now it's back down a fair bit as well. So he said that this is basically gambling. It's a frenzy. And in his opinion, it's really been encouraged to a large extent by companies like Robinhood that offer sort of brokerage-free trading, and he currently thinks that the idea that Robinhood offers brokerage-free trading is basically the biggest lie in investing today. If you're unfamiliar with Robinhood's actual business model and how they make money without charging transaction fees on purchases and sales of shares, they basically sell order flows to other investors and hedge funds. And Charlie Munger thinks that you're probably paying more from that order flow than you otherwise would in fees. And he thinks that, the idea that Robinhood is a free brokerage is just a complete lie and something that he really can't get behind at all. And he thinks businesses like Robinhood, who have firstly that business model of basically marketing themselves as a free trading platform, and also simply the design of the app, kind of in a way it's almost designed to sort of lure in people with kind of a gambling mentality. He believes that that has caused one of the biggest bubbles in the market right now, which is basically amateur investors coming into the stock market and trading or investing basically just on pure momentum, not really caring about business fundamentals, but simply buying because a stock price is going up. Sort of a follow-on question that Munger was asked after giving his sort of Robinhood comments was basically, which do you think is crazier, Tesla at a diluted enterprise value approaching $1 trillion, or Bitcoin at 50,000 US dollars or whatever it is? And Charlie Munger basically responded to that by saying, you know, what's worse, a flea or a louse? He doesn't quite know. So he really doesn't view either of those investments, or at least at current valuations, either of those things fondly. He mentioned that he has never bought gold and therefore will never buy Bitcoin. He's sort of applying that same logic to Bitcoin. But he's clearly not fond of the current Tesla valuation and certainly wouldn't go anywhere near it at current prices. But Charlie Munger didn't stop or hold back at that point when it comes to speculation and bubbles that he sees in the stock market. The final one he mentioned was SPACs, special purpose acquisition companies. Basically, these are companies that the entity just holds a lot of cash essentially, and then goes out and buys some private company, and it's sort of a way to make that company public without going through the IPO process. But there's so many of these SPACs now. Everyone seems to have a SPAC. Some people have multiple SPACs, and I'm not going to name them here. I'm sure you know who many of these people are. But he basically sees this as what he called an irritating bubble. He sees a lot of these SPACs that are trading at substantially higher than the cash that they have in those businesses, and it's just setting up a framework to where for these investments to do well, the investors that are leading those SPACs, the promoters in the SPACs, they have to make incredibly good investments. If you're buying into a SPAC that is trading at, say, 50% higher than the cash was sitting within that SPAC, which to me just makes no sense, that's a really high hurdle rate. The investor that is buying some private company through that SPAC has to make an incredibly good investment to get over that big 50%, premium hurdle that the market has built around that particular entity. And probably the quote of the entire Q&A from Charlie Munger on these SPACs and on this, irritating bubble as he described it.
It's just that the investment banking profession will sell shit as long as shit can be sold.
Okay, so the second main topic that I want to talk through with some comments from Charlie Munger was basically his thoughts around the Daily Journal Corporation itself. Now, I had a video come out maybe a month or so ago, which was essentially a Daily Journal Corporation stock analysis, and I talked about in that video quite a bit the software business within Daily Journal. A lot of people see the Daily Journal Corporation as sort of this dying legal newspaper company, which is certainly part of what's going on at the Daily Journal, but really the main part of their business now is software. It's trying to automate court systems all around the world. They have big customers in Australia and also in California, and they're looking to grow that business out into the future, and that will really be what drives the Daily Journal Corporation moving forward. So he spent a fair bit of time basically reinforcing the fact that that is what Daily Journal Corporation intends to do, is they want to focus strongly on their software business. When Munger was asked about capital allocation and now that the business is cash flow positive from the software entity, what are they going to do with the cash or the excess cash that comes in? And Charlie Munger basically said that they are currently working in quite a big industry with this sort of automation of courts. But it's by no means a sure thing. So in terms of capital allocation, Charlie Munger said that they intend to kind of go hard on the software business, and after that they will kind of see what happens. He says that allocating capital outside of the business right now is really difficult. We see companies like Berkshire Hathaway in particular sitting on a lot of cash, struggling to find good investments with where interest rates currently sit and where stock market prices and valuations currently sit. So Charlie Munger basically says that he expects his fair share of difficulty as well when they sort of get to that point. But for now, in terms of capital allocation, the software business is definitely the focus. And while talking a little bit about the future of the Daily Journal Corporation, Charlie Munger also took a couple of minutes to talk about the past and one person in particular that they worked with for a long period of time who had recently passed away. And that person, of course, is Rick Guerin. Now, Rick Guerin is one of the super investors of Graham and Doddsville. He was originally made famous by that Warren Buffett speech, by that Warren Buffett presentation, where Buffett basically presented the investment track records of several value investors and argued that if you have the right investment framework in terms of being, someone that tries to buy future cash flows and assets for less than they're fundamentally worth, then you can do very well as an investor. And Rick Guerin was one of the investors that was in that case study, and he was actually the one with the best track record. He had returns, which I will put up on the screen here, which were just astronomical. And Charlie Munger and Rick Guerin were actually the ones that originally acquired the Daily Journal Corporation many decades ago. So Rick Guerin unfortunately recently passed away, and these are sort of a few of the things that Charlie Munger went on to say about Rick. So he said that Warren Buffett himself and Rick Guerin actually bought blue chip stamps back in the day. So this was a really interesting business. It was one of their first kind of companies where they were exposed to this concept of investment float, where you receive a bunch of money up front, you can invest it in the meantime, and then it sort of gets paid out towards the end. Which is exactly what Berkshire Hathaway does in their insurance businesses today. And with blue chip stamps, they basically had these stamps, think of them like, I guess, credit card points or something maybe today, where people spend their money up front, the credit card company or, Flybys or something here in New Zealand, holds those points for you, holds effectively that cash for you. These businesses can then sort of invest that money in the meantime while you're waiting to, claim those points, make some money on it, and then, pay out the original capital back to that customer, but keep the gains. So that was an interesting kind of story from Charlie Munger about acquiring blue chip stamps with Warren Buffett and Rick Guerin. He mentioned that they also obviously bought the Daily Journal Corporation together. And one of the other things that I've always found fascinating about Rick Guerin's story is that he had no formal education in investing whatsoever, but he was ungodly smart. So Munger talked about Rick Guerin taking this Navy IQ test back in the day, and essentially Rick Guerin actually left the test early and then ended up getting the highest score in the class. So he was always extremely intelligent, and when he applied that intelligence to investing, he did very well. He actually also famously has a story of sort of blowing up in an investment context. He did invest with margin at one point and I believe went to zero. But nonetheless, he is extremely intelligent, a very good investor, and became very wealthy yet again after that. So really interesting to hear that kind of reminiscing of Rick Guerin, and he will certainly be missed at the Daily Journal Corporation. Now that really covers a lot of the core underlying messages throughout this Q&A from Charlie Munger, but there were a few sort of one-off questions and things that I also found kind of interesting. So let's go through some of my personal highlights from one-off questions that didn't really fit into any of these sort of overall themes of speculation or the future of the Daily Journal Corporation and the capital allocation in that business. The first one on my list here is BYD. Now, BYD I actually mentioned in my Warren Buffett letter summary because that business actually showed up in Berkshire Hathaway's top holdings for the first time, not because they put new money into it, but because the stock price has gone up enormously. Now, Munger talks about owning BYD for about 5 years through the Daily Journal Corporation and it basically not going anywhere. And then in the past 12 months, it's basically quintupled in a year. It's gone up a massive amount. And he was essentially asked, even though BYD, in your opinion, is a phenomenal business with incredible people, is it now getting to a point where the maths just doesn't make sense, where the price is so high that the future returns are likely to be lower? And Charlie Munger, long story short, essentially said yes, but he really likes the people there, and he also likes the company, and he's one that tends to hold on to great businesses almost regardless of price, not entirely. If the price just gets even more stupid, he may look at selling, but in his words, he's likely to be a little too loyal even when prices are high. So interesting to hear that he is likely to continue to be a long-term shareholder of BYD. He also had a couple of comments on basically screening people. Both Munger and Warren Buffett have a long track record of working with some really great people, and he was basically asked how they do it. And he said, typically screening out people is not that hard to do. You can look at their track records and see what they've done in the past. If you avoid chronic drunks, then that's going to help. There's a lot of shortcuts that you can go ahead and use in order to, avoid bad people. And over time, he's sort of built up this network of really good people around him. And that's something that tends to just snowball and kind of attract more and more good people. So that's sort of the way that he's achieved that. He also had some commentary about learning, about being a lifelong learner. And he basically said if you're not a lifelong learner, you're like a one-legged man in an ass-kicking contest, which I have heard him say that a couple of times about various different topics and always find that analogy hilarious. But nonetheless, he says that basically to be a good lifelong learner, you have to seize good ideas when you see them or hear them or read them, whatever it might be. And that's basically what he's done through his life. Monish Prabhai often talks about clothing, taking good investment ideas from other people or good ideas in general from other people and using them, for your own benefit. And that's essentially what Charlie Munger is talking about here. Anytime that he's been presented with a really good idea around investing or whatever it might be, he's been one that has always taken that idea on board and used it basically for the rest of his life. But he also reinforced that you should always invert your ideas. You should be someone that can explain the counter arguments to some of the ideas or the convictions that you have. And if you can explain them better than, your opponent in some sort of debate that you might be having on any particular topic, then that's a position where you can really make good informed decisions. If you're someone that tends to, have an opinion on something, and you only ever seek out information that confirms your bias or confirms your opinion, that's something that a lot of people do, and it's something that Munger tries to avoid. Munger also had a couple of comments around modern monetary theory, which is basically the idea that you can print money and, unlike what we thought would happen in the past, you really don't have a lot of crazy inflation like many people might think you may. Charlie Munger said basically put me down as skeptical, so he is kind of skeptical about all this money printing and the potential, issues that may cause, or, modern monetary theory would suggest there's not many issues, but Charlie Munger is skeptical. And he said, if fixing everything was as easy as just printing money, you could make the minimum wage $100,000 a second or something like that, and, everything would magically be fixed. But that's not how it works, and at some point, he believes that inflation just has to come. He also had a few comments on commercial real estate. So he mentioned that in some sectors, commercial real estate can be a good investment, but it requires near perfect management. He mentioned that he has a couple of apartment type investments, which he really likes, but there's certainly some real estate sectors like retail, for example, that have been struggling for a period of time. He's not particularly bullish on office space, for example. He believes that over the past year or so, where a lot of people have worked from home, he sort of sees that trend continuing onwards even after we do return to some normality. He sees that the demand for office space is likely to go down, at least in the medium term. And the couple of final things that he mentioned, firstly, he had an interesting story about one of the endowment funds that he's sort of on the board for a particular institution, and he has had some influence over their endowment funds. And he sort of gave the impression that it's been quite challenging. He's on the board with a lot of sort of hotshot finance people that, would typically try to overcomplicate investments. But he's had some great wins in that particular arena. So this particular endowment now has their entire portfolio in basically 2 investments, very Charlie Mungerish. The first one is basically a good chunk of Li Lu's fund at Himalaya Capital, and the second is a Vanguard, he just said a Vanguard fund, presumably that's some sort of S&P 500 index fund. And he said, we have lower costs than everyone else because we're not paying mutual funds and hedge funds and so on, besides, of course, Li Lu. But Li Lu is a different breed of human being, so we'll give him a pass on that one. But basically, he said they have lower costs than pretty much every other endowment in the world, and they also have better returns than most endowments in the world as well, by keeping it simple, investing in a low-cost index fund, and also passing some money off to Li Lu, who has a phenomenal long-term track record as an investor. He mentioned that he doesn't see the oil and gas industry going away anytime soon. Certainly he sees a lot more renewable energy out into the future. But he also mentioned that oil and gas is heavily relied upon, or he actually worded it as hydrocarbons, but oil and gas is heavily relied upon as a chemical feedstock. That's not to say that he thinks it's going to be a great industry or great business, but it's certainly not the newspaper business, is how he described it. It's not going on a dramatic downhill slide like he thinks a lot of people seem to have the impression that it might do. And the final thing I'll leave you with here is 3 tips that Charlie Munger gave right towards the end on how to lead a happy life. He always seems to get asked these types of questions. How do I live so old? How do I live longer? And how do you lead a happy life? He basically said that he lives a long time purely by a genetic accident, but he did give a few tips on how to lead a happy life. So let's finish the video up with that. He basically said leading a happy life is really simple. So the first thing you have to do is have low expectations. I won't go too much further into that, but he basically said, the lower your expectations, avoid disappointment and so on. So have low expectations. When things happen, suck it up and cope, basically. And the third thing, which he actually took from Rose Blumpkin, who they acquired the Nebraska Furniture Mart from at Berkshire Hathaway. Rose Blumpkin had the saying, which was always tell the truth and never lie to anybody about anything. And he thinks that's a great tip for pretty much everyone to take on board. He said that man is too soon old and too late smart, but there's really very little he would have changed about his life, and he's lived a very simple and happy life over his 90 plus years at this point. So that's all we have for this video, and that is my summary of Charlie Munger's Daily Journal Annual Meeting Q&A for 2021. It's always fantastic to be able to get a peek into the mind of one of these world-class, all-time great investors. So I do hope you enjoyed. If you did, please hit like and hit subscribe, and I will see you in the next one. Cheers.